Welcome to Agoricom's Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we are moving fast because, well, the data demands it. Our deep dive is really a focused extraction. We're pulling out those high-stakes, quantifiable numbers from today's small cap movers, numbers that absolutely require immediate follow-up research from you. We're not looking at speculation. We're isolating the financial metrics and technical results that signal imminent scale or maybe critical milestones.
That's exactly the mission. And we have a genuinely diverse set of results today. I mean, massive gold hits and high-stakes exploration, clear proof points of accelerating growth in digital finance, and a really fascinating look at how major government policy is instantly creating commercial opportunity in the clean tech sector. Every company we cover today has released hard data, actual quotes, specific numbers that signal a potential step change in valuation or, risk profile. Let's start on the ground floor with metals.
Okay, first up, Endurance Gold Corp. That's trading under EDG on the TSX Venture and ENDGF over on the OTCQB. The headline itself is pretty crucial for their investors. Endurance Gold extends Crown Zone with high-grade gold and antimony, and importantly, a resource estimate nears.
Right. This news really reinforces the kind of consistency that portfolio managers love to see. They seem to be moving rapidly toward a quantified resource, and these results definitely support that goal. We're seeing exceptional grades here. We're talking about drill results that include 14.03 grams per ton gold and 1.46% antimony over 5.2 meters. That's a stunning combination.
A stunning combination indeed. And it wasn't just an isolated hit, was it?
No, not at all. They also reported 6.10 grams per ton gold and 0.22% antimony, at this time over 10.0 meters.
Okay, so these aren't just great grades. They're confirming continuity along their Royal Shear trend. But let's zoom in on that other element you mentioned, antimony. Why should investors care that it's showing up with the gold?
The antimony. That inclusion is a significant strategic bonus. It's a key ingredient in specialized alloys and, really crucially, in advanced battery technologies. And because both the U.S. and Canadian governments have classified antimony as a critical mineral, its presence provides potential byproduct value that helps stabilize the project economics.
That's another layer.
Exactly. And maybe even more importantly, it opens the door to specialized, non-dilutive government funding and grants that could really accelerate their path to development.
So that's the key connection then. Antimony provides a layer of, let's say, geopolitical stability to what looks like a traditional exploration play. Okay, so given these strong results, they're targeting their first mineral resource estimate when?
They're aiming for completion by year-end or perhaps early in the new year.
Now, is there a risk here? If the infill drilling they need for that estimate, if it fails to maintain these kinds of high grades, could market expectations suffer?
Oh, absolutely. That risk is always present when you transition from those exciting discovery holes to the more detailed definition drilling. However, these specific high-grade results, they seem to reinforce continuity in two key ways, both at depth and along the strike. It means the high-grade parts appear pretty robustly connected. So yes, the market will be pricing in a strong outcome, but these numbers do support that confidence as they move from geological potential towards, quantifiable, reportable metal inventory.
Okay, let's move continents now. We shift focus to Srenan Gold Corp, trading as SRAN on the CSE. Their news is purely about discovery potential down in South America. The headline: Srenan Gold's first holes at Tapanoni outline a significant gold system in Suriname. When a first drill program hits this hard, we definitely need to know the numbers.
Yeah, this is truly spectacular for an initial drill program. That's why it's breaking news, really. The main intercept they reported was 64.0 meters, grading 3.0 grams of gold per ton. An interval that wide, it already established a significant bulk tonnage potential right off the bat.
64 meters at 3 grams. But the number that really jumps off the page is that ultra-high-grade internal chute they found.
Precisely. Contained within that broader 64-meter zone, they hit 1.0 meter at a staggering 145.4 grams per ton gold. That was in hole 25 RDD 004.
Wow. 145 grams per ton.
It's an incredible hit for any stage of exploration, let alone the first holes. It confirms a system that's at least 150 meters wide, both in the bedrock and the overlying saprolite.
Saprolite. Maybe explain that quickly for listeners.
Sure. Saprolite is basically the soft, chemically weathered rock layer you find near the surface. It's often much easier and cheaper to mine initially compared to hard bedrock.
Got it. Okay, that 145 gram per ton result is sensational, no doubt. But I have to ask the critical technical question here. Does a single, isolated, extremely high-grade sample like that,
Yeah.
does it introduce the risk of a nugget effect, where the gold might be highly concentrated but maybe not continuous?
That is absolutely the critical risk to monitor in the follow-up work. A high-grade spike like that, it does suggest native gold might be present. And while it's obviously great for the overall grade average, the next phase of drilling really must prove the continuity of that wider 3.0 gram per ton zone. They need to show the gold system is predictably defined rather than just relying on these, random super high spikes.
Makes sense.
But the significance right now, however, is huge. They've essentially converted decades of, frankly, spectacular historical surface data, things like grab samples that went up to 108 grams per ton.
Yeah.
They've turned that into confirmed impressive subsurface mineralization, and that really validates the potential across the entire 4.5-kilometer Randy Poeketty trend they're exploring.
Okay, we've looked at physical assets underground. Now let's switch to the digital realm. Here, the value proposition isn't defined by ounces, but more by network scale and financial execution. We turn to Bitcoin Well Inc., trading as BTCW on the TSX-V and BCNWF on the OTCQB. Their headline really screams validation. Bitcoin Well's revenue jumped 62% as user growth accelerates, company adds to Bitcoin treasury.
Yeah, this is a pretty textbook example of a company capitalizing on market opportunity and really starting to achieve operating leverage. For Q3 2025, their revenue climbed 62% to $34.0 million year over year.
That top-line explosion is impressive.
It really is, and the user base seems to be fueling it. Their unique user count grew an astounding 128% year over year. They're now serving over 57,000 unique users. However, let me ask this. If revenue's up 62%, why did the gross profit only increase 46% to $1.3 million? Doesn't that suggest maybe some margin compression just as they're scaling rapidly? That's exactly the right question to ask. That slight lag in gross profit growth, it suggests a few possibilities. Maybe increased costs of acquiring all those new users, or perhaps higher transactional costs from managing higher volume across their networks, both digital and the physical ATMs. But the good news is that the operating leverage is kicking in further down the profit and loss statement. Their adjusted EBITDA loss significantly improved. It dropped from $0.6 million last year down to just $0.3 million this quarter.
Okay, so narrowing the loss.
Exactly. They are closing that operational gap towards profitability. It shows the aggressive spending seems to be paying off, bringing them closer to sustained break-even.
All right, now let's look at their strategic moves on the balance sheet. Subsequent to the quarter end, the company purchased an additional 26.63 Bitcoin. That brings their corporate treasury total up to 69.000 Bitcoin. That seems like a specific, measurable vote of conviction in the asset itself.
It absolutely does, and it connects directly to their fundamental strategy. See, Bitcoin Well operates with a non-custodial mission, meaning for you, the listener, they don't hold the private keys to your Bitcoin. This drastically reduces their security risk and, importantly, regulatory exposure compared to fully custodial exchanges. So by holding 69 Bitcoin on their own balance sheet, they're aligning their corporate treasury with the very asset they facilitate transactions in. It's a statement of faith, really, in the underlying asset.
Although
We have to note, holding a treasury in a volatile asset like Bitcoin means accepting those fair value accounting fluctuations you'll see quarter to quarter on the books.
Right. Understood. Okay, let's pivot now to a completely different definition of success alignment with major government initiatives. We're looking at HPQ Silicon Inc., TSX-V, HPQ and OTCQBFF, HPQFF. Their headline directly links their future to policy. HPQ Silicon says Canada's 2025 budget supercharges its three-pillar clean tech strategy.
Yeah, what's fascinating here is that the policy announcement itself becomes the immediate catalyst. It seems to accelerate the timeline for potential commercialization. The 2025 federal budget isn't just a gentle push. It looks like a massive, multi-billion-dollar commitment to reshoring high-value, low-carbon manufacturing in Canada.
And HPQ has identified three core areas, their three pillars, that they believe are now directly supported by this government spending. Can you quickly lay out those pillars for us and how they match the government's priorities?
Certainly. So the first pillar is fumed silica production. This is a specialty material critical for everything from solar panels to semiconductors. The new budget incentives specifically support the reshoring of this kind of domestic specialty material, reducing reliance on foreign supply chains.
Okay, pillar one, fumed silica reshoring. What's two?
Pillar two is their HPQ Endura Plus batteries. These feature silicon anode cells, which align perfectly, it seems, with new government procurement priorities that favor Canadian-made clean energy components.
Makes sense. And the third pillar?
That's their metagene hydrogen process. It enables distributed, on-demand, clean fuel generation. This aligns directly with the budget's major push for climate competitiveness and decentralized energy solutions. It seems like they're hitting all three major spending themes simultaneously.
Okay, so practically speaking for the investor,
Yeah.
what's the hard-cold value of this government alignment? It's not exactly a grant handed over, right? It's more about reducing risk.
Exactly. Think of the government tax incentives not as some potential grant application you have to hope for, but more like the fastest lane on the highway to commercialization. The budget includes things like accelerated capital cost allowances, meaning faster tax write-offs and refundable tax credits.
Okay.
In plain language, this significantly reduces the capital risk for building large industrial projects. It makes it cheaper and faster to finance and construct complex infrastructure, like their proprietary one-step fumed silica reactor right here domestically. This policy tailwind, it really changes the competitive landscape for a company like HPQ almost overnight. Now, execution becomes the ultimate opportunity.
Fascinating. Okay, our final deep dive today brings us back to gold exploration. But this time, the focus is purely on scale and volume. Sitka Gold Corp, trading as SIG on the TSX-V and SITKF on the OTCQB, they're delivering proof of concept up in the Yukon. The headline: Sitka Gold extends Yukon discovery with long, consistent gold intervals at surface.
Yes, this news is all about visualizing the potential ultimate size of the deposit. It's about proving the kind of continuity you need for a potentially low-cost, open-pit mine scenario. And just look at the sheer width and consistency they're reporting at their Roscoe discovery. They announced 107.9 meters grading 1.01 grams per ton gold, starting right from surface in one hole.
108 meters at a gram.
Yeah.
And they followed that up with an even longer interval, didn't they?
They did. 297.0 meters, grading 0.61 grams per ton gold, also starting right at surface.
Almost 300 meters of mineralization, right at the grassroots.
Yeah.
When you talk about that kind of volume, even at a lower grade like 0.6 termite, you're talking serious bulk tonnage potential.
It absolutely signals massive scale potential. The gold starts literally at the surface, and the system is currently described as open in all directions. And to really prove the robustness of this consistency, they shared a crucial technical metric.
Which was?
16 of the first 17 holes drilled at Roscoe have delivered more than 100 gram meters.
Okay, 100 gram meters. What exactly does that mean for the average investor listening? Can you break that down?
Sure. It's a key metric geologists use to compare different intercepts across various projects. It's simply the grade multiplied by the width of the intercept. So hitting 100 gram meters consistently, it means you likely have excellent potential for a large total metal inventory. It confirms this probably isn't just a scattered deposit, but one that is consistently mineralized over these vast widths. It strongly supports the idea of a very large potential resource.
The scale is definitely clear. But that kind of scale, especially near surface, low grade, it introduces significant capital risk, doesn't it? These large deposits often require massive initial capital expenditure and face complex, lengthy permitting. How does the market typically weigh this scale against those inherent development challenges?
That's absolutely the trade-off inherent in these bulk tonnage projects. The promise is longevity, potentially lower operating costs once built, but the risk is that substantial upfront capital needed to move the project through feasibility studies and permitting, and that makes the ongoing news flow even more critical for Sitka. They currently have assays pending for 26 more holes from Roscoe.
26 more.
Yes. And those results will be the ultimate determinant, really, of whether this zone extends significantly beyond the currently confirmed 575 meters of strike length. Each assay result becomes a critical data point, confirming whether that potential capital risk is justified by the sheer scale they might be uncovering.
Okay, what an incredible density of breaking news and quantifiable results today. Let's just quickly recap the numbers that should be driving your research agenda right now. We had Endurance Gold's high-grade hit of 14.03 grams per ton gold, significantly coupled with that critical mineral, antimony.
Right, and Shrena Gold delivered that stunning pure exploration win 1.0 meter, kicking 145.4 grams per ton gold. Just incredible. Then in digital assets, Bitcoin Well's momentum was clear with that 62% revenue surge, and the strategic conviction shown by building up their corporate treasury to 69 Bitcoin.
And finally, we saw Sitka Gold demonstrating immense scale potential with that nearly 300-meter-long gold intercept starting right at surface. These are all definitive, quantifiable data points for you to dig into.
And maybe this raises an important question, one that kind of connects all these disparate stories, for you to consider as you do that digging. We saw high-grade gold integrating with critical minerals like antimony, which potentially attracts stable government interest. We saw HPQ aligning their entire business model with major federal spending and tax credits. And then we saw Sitka pushing massive pure exploration scale in the Yukon. So when you're looking for long-term value, does the integration of corporate strategy with major stable policy or the inclusion of critical minerals, does that represent a fundamentally lower risk, maybe a more sustainable value proposition than a large, pure exploration gold play focused solely on grade and scale? The key, I think, is translating these breaking news results we discussed into a really comprehensive understanding of both the risks and the opportunities in parallel.
A great thought to chew on as you conduct your own research. Thank you for joining us for this deep dive into today's source material. We'll see you next time.